Something big is building for Bitcoin. We've seen a lot of volatility recently when it comes to BTC, and I don't think it's anything good. In this video, I'm going to be jumping down into the technical analysis on Bitcoin. We're going to be taking a look at the hourly, the daily, and the weekly timeframes, and I'm going to be sharing my thoughts and opinions on what I think is unfolding here for Bitcoin. So buckle yourselves in. It's going to be a rocky ride. Let's kick things off with our 1 hour time frame. So on our 1 hour time frame, we have seen these microstructures moves to the upside. And for the most part, it kind of gets a little bit of confidence from retail investors thinking, okay, we might be done with the corrections and we can start to maybe, start to load up those long positions to the upside. But I would say hold your horses because it doesn't look overly strong to me. To me, we have this irregular flat idea. And I do think this is something that we have to really seriously consider because we have a 5-wave drop over on the left-hand side here. It's very unusual to just have a 5-wave move like that to the downside without obviously having another follow-up 5 waves to the downside, right? Essentially, if you start with 5 waves, you must end in 5 waves. And so I'm not sure if I've still got all these things. I do. So we have the two we have a running flat and an irregular flat correction. And that is kind of where I think we are currently sat in here with these particular structures. And so 5 waves down, irregular flat, another 5 waves down, minimum expectations. And now it's possible that we still continue to move up a little bit higher into this kind of 5th wave move. This is a diagonal based pattern. We have the higher highs and higher lows. Let me go ahead and show you what those look like. Right inside here, and we have it also in here as well. I'm just going to anchor this in so we can get that across there. So you can kind of see that we have this higher highs and higher lows, right? But these do have a tendency, a lot more so, to break onto the downside than to the upside. Now, considering our structured move to the upside, we've got a couple of options here. I think it will be a running flat correction like this with a diagonal at the end, but it's possible that that might not be correct either. But for the most part, I think that is realistically what is going on considering what happened beforehand. So for the most part, this looks like it's going to be running out of steam and it's likely to break on down. I don't think, though, that it's going to happen right now. I think that we're probably going to continue this kind of higher high, higher low situation a little bit longer. And I think realistically, we're building up to a big crash in the market for next week, right? And so I think we're going to have a really boring weekend. I think we're going to have kind of like low volatility and those kind of things over the weekend, but ultimately a breakdown next week, specifically Wednesday when we have FOMC, interest rate hikes and all these kind of things. Expected no hikes is kind of where the US market is kind of positioning itself at the moment. I suspect there will be a hike, even though inflation rate rose, core inflation rate dipped down a fraction. We have a little bit of confusion in the market as to kind of what's going to happen there. But for the most part, I would suspect, considering how the markets are very corrective in the way that they're kind of trading at the moment, followed up with some fundamental things in the markets, around inflation and interest rates and things like this, I suspect we are going to see a rise in interest rates that will potentially fuel a bit of fear in retail investors, which will also be compounded also by the FTX liquidations and so forth. So suspect that more liquidity will be sucked out of the market with the interest rate hikes. More liquidity is going to be sucked out of the market with the FTX liquidations. There is very little reason logically to be thinking that price action is going to be moving to the upside. If anything, price action would be moving to the downside. Now, just because that's a logical approach doesn't necessarily mean that that is where some of these market makers are going to want to push the price, because again, they're going to be going for wherever the highest amount of liquidity is. And if there's a lot of people going short on the market, that liquidity sits higher in the price chart. And so we want to be a little bit mindful, but for the most part, my expectations would be that this particular pattern that you see right here is a bearish indication of things to come. Now, when we take this to a daily, it doesn't get any better. And so when we take a look at it from a daily standpoint, you can see that we have the irregular flat wave 2 right inside here. Okay, and that takes us up right into, let me just actually delete that off there for a second, right into this high, which has our daily 200 and daily 50 EMAs. You can see right here that this is going to be our higher expectation, around 26,996 on the 200 EMA and $27,079 on the 50 EMA. These are still on a collision course for crossing the 50 and 200 EMA. If we actually throw in the MAs as well, we can see that the yellow line is our 50 moving average. The blue line is our 200 moving average. They crossed already. which you can argue is a death cross to a point. But realistically, what we're looking for is we're looking for the 50 moving average, the yellow line, to cross down lower than the 200 EMA, which is the white line. And you can see that they're on a collision course. This is going to be a death cross in the making, and we are likely to see a big bearish reaction to that. Okay, it's not quite there, and this is why I think it's going to happen next week as we start to see major shifts in the market. Okay, so on the daily time frame here, we can acknowledge that, yeah, we're in this kind of fifth wave move to the downside. We are still in our targeted range for 22,696 to 23,875. That hasn't changed. And we are looking to start a third wave move to the downside. And that's the third wave of the fifth wave on the daily time frame. So a lot of bearishness to kind of be seen here. And although we have this little move to the upside, it isn't enough to kind of break us out of this structure. It's not enough to take Bitcoin out of its bearish positioning and flip that into a bullish position. Instead, if we want to be bullish on Bitcoin, Bitcoin's price has to be higher than 28,588 to break it out of the structure. And if it doesn't do that, and unfortunately, well, we're going to have to fulfill this particular pattern, which would take us down more towards $22,000 Bitcoin. And so, yeah, we are bearish. And as much as we don't want to be, and I really do want there to be a bull market, that at the same time, the data is the data. We see this within the on-chain metrics, and I know I haven't covered that on the channel for a while, but anyone who is a member over at membership.𝗕𝗘𝗪crypto.io will be able to jump into the on-chain data and also see what is going on with selling pressure at the wealthy level and buying pressure only at the retail level. Essentially, this imbalance is rather concerning to me, specifically when there is so much Bitcoin held by retail investors right now, and it doesn't take a lot for a retail investor to get spooked. So just be really mindful that actually there's a lot of reasons why we might see a shift in price pressure to the downside, even if you don't think that we're likely to go down as low as 22,000 or as low as 20,000, maybe even as low as $15,000 Bitcoin, right? There's a lot of things that can create panic within the market and drag the price of Bitcoin into those low levels, right? Even stuff that sits outside of the basic stuff like the price action that you see in front of you. Now, when we jump over into weekly time frame, you can see that we found brief support here on the 200 weekly EMA. We are finding resistance again right up there on the 50 weekly EMA. We're sandwiched between the two, and this is something that's been very consistent over the last month. You can see that we've had the wicks going up and down, and basically dojo candles in the last 3 weeks just basically open and close in a very similar position. So although we're testing the 50 EMA right now, a move back down to where it opened could be very, very interesting. The opening was around 25,841. So are we going to be going for another dojo candle, basically just testing the support and testing the resistance in a given week? Ultimately, we're oversold on the weekly time frame, but we can be down here for several weeks. From a daily standpoint, we're actually in an overbought area, and we are looking for that correction to the downside. So lots to play for here for Bitcoin, and I don't think we are in a good place right now. Now, I'd love to be wrong. I'd love to see Bitcoin rally up. I just am not seeing it right now. Let me know what your thoughts are in the comments below. Do you think $20,000 is inevitable, or do you think we're never going to see those numbers again? Let me know your thoughts in the comments below. I'm going to leave the video there. If you found it useful, smash the like button. If you're new, subscribe. And if you haven't joined us in Discord, what are you waiting for? Check it out, linked in the description below. Until the next one, have a fantastic day.